Hey everybody, I'm David with Bolivar Live, and actually this is probably the first show that we're doing in the new studio.
It's the first show I'm doing in the new studio.
First show anyone's seen in the new studio, and you'll see different things behind us just real quick. When we're talking about houses, we'll be able to showcase homes. When we're talking about weather, maybe not with you, but with me, we'll showcase weather. So there's a misconception out there, and that's what we're going to talk about today. And you just went through, I guess,
An update, a class.
An update.
Yes. Yeah, we get those a lot.
And the misconception is Fed rate versus mortgage rate.
Oh, yes.
And you and I were talking before in the front, and you said, David, do you realize the mortgage rate as of, what was it?
Friday
was 6.1, I think you said.
Mm-hmm. Which everyone's excited about.
Yeah. But that's the same rate that
as it was
a year ago.
Exactly a year ago.
And you said, everyone said, oh, wait, when the election's over, the rates are
going to drop. Right. And so they waited.
Typically, anytime there's an election year, things are sort of cattywampus. People don't know who the leader's going to be. They don't know, where everything's going, so they clam up.
Yeah, real estate on an election year is always that last, the second and last quarter of the year is very stalemate. Nobody wants to do anything because they're not sure.
They're not sure.
And you got half the country is excited about one thing and half the country is excited about something else, and they're not sure. And so by the end of the year, you start to see the market pick up, and then the following year, everyone this time last year was projecting, January is going to be huge and the spring market's going to be phenomenal. Well, we all know, here we are sitting at the end of September.
So let's talk about real quick the Fed rate.
So the Fed rate is the interest rate that the Feds pay to borrow their money.
Right.
Okay, to take care of their debts, which we know our country has a tremendous amount of debt.
Right.
So trying to keep that rate affordable for the government is not the same as what you and I are going to pay to go get our mortgage.
For the mortgage.
Right. Completely different.
And so how does the mortgage rate, how is it come up with?
The mortgage rate is a little bit more tied to the bond, the 10-year bond rate.
Okay.
Okay, and I am not a financial advisor. Okay, and I am not a lender. So this is just what I've learned over the years, and of course we get a lot of education at Happy Holidays, so we get these updates. So what happens is, for example, the mortgage industry, they are doing their economic reports. They're watching all year, and they're projecting what they think is going to happen. And so they're building those projections into what they're setting their mortgage rates at. For example, the past couple of months, mortgage rates already had tied into it the idea that the Feds were going to drop their rates.
Right.
So as everybody was anticipating this Fed rate drop, they were anticipating a bigger mortgage rate. Like people were really thinking, we're going to go down to 5.
Right.
Okay,
that's not going to happen.
We probably won't see 5 at all, right? We're not going to see, unless we have some huge catastrophe, we're not going to see 3 and 4.
Right.
Like that was a rare catastrophic event.
Once in a lifetime deal.
Let's just keep it a once in a lifetime deal.
Right.
We all loved it for the interest rate and nothing else, and so let's just leave that in the past. A healthy interest rate in our economy for our nation has always floated between 6 and 7%. And you can go way back, and I've said this many times, you can do all the research you want, and if you want research, you can call me. I'll give you research. You can go way back to 1971, and interest rates were hovering around 7%. And they stayed that way. They stayed that way until the 90s.
My first house I bought, and I can't even tell you the year. I can tell you it was in Bear Creek area, west side of Houston, 14%, and it was off the T-bill.
Right.
And so every year, I think it was July, maybe.
It changed a little bit.
It could go up a little bit.
Or go down.
Now, and they had a limit on how much it could go up and how much it could go down. But but it was 14%.
Right.
Now, the house wasn't $400,000 or $500,000.
So that's the other thing we have to watch. Okay. So as we're excited about this interest rate dropping, the part we're missing is as the interest rates drop, the house prices are going to go up because you're going to start having competition back in.
Right.
So we've been talking all summer about all these great deals you can do, and I'm working another great deal.
We've got another show coming up where we're talking about instead of buying a new home, have it remodeled. I think next week or the following week. And
we're going to talk a little bit about that. But remember that the reason that we can, and houses, despite what people are saying, the houses are selling again.
Right.
They're not selling as quickly. They're definitely not selling at top dollar sticker price or above price. However, they are selling. And because you have this ability to negotiate, you can do things like negotiate a buy down for your interest rate. So if you're at 6.3 or 6.4 and you want to be closer to 6 or a little under 6, you can negotiate some of that, right? And we talked about that before. Waiting is going to cost you money. And it's going to cost you money in a couple areas. It's going to cost you money because when interest rates start to creep down, you're going to now have competition.
Right. More buyers.
More buyers, which means less to choose from. Also, remember that you're writing that interest off on your taxes. If the interest rate goes down, you're writing off less. And so you got to look at that really carefully and decide, is it worth paying more over the 30 years because I waited to have less interest, but now I'm writing less off? It's a juggle.
It's a half. It
is.
From Peter to pay Paul.
Exactly.
Almost, you know,
so, and especially because we're splitting hairs. We are not talking about dropping from 6.1% to 4%.
Right.
We're talking about over the next, I would say, 6 months, going from 6.1, maybe creeping up to 6.5. I don't know what it is today. I didn't look. Or going back down to maybe 5.8.
Right.
5.7 if we're really lucky.
Right.
That's going to be our needle over the next 6 months or so. This is not going to be, I'm getting 4.99.
Right.
Now, I know we see new builds advertising 3.99, 4%, 5%, new construction, but you have to remember that those deals are being made because a builder and a lender and a title company are all working together. They're all contributing to buying down that rate for you.
All of them are giving in.
They're all giving in, and they're buying that rate down. Okay. So don't get excited every time you hear the feds are dropping their rate.
Right. Because it's not going to see an instant. Because more. And
a lot of them, they've been built in.
Yeah, you told me this months ago. No, David, it's already built in.
It's already built in.
Because I called you and said, hey, I heard this was going to happen. Yeah, but I just talked to my lender yesterday, and it's already built in. So we're not going to see a big
We saw maybe like a 0.2% change.
Right.
Not enough to really change the difference. So it's not. It might make your mortgage payment a little more tolerable. It's not going to be the type of change that's going to allow you to go from you can now afford a $350 house and now you can afford a $600,000 house. That's what we were seeing back in 22.
Right, when the interest rates
were cut in half.
Yeah.
We're not going to see that. What we're going to see is this $350 house was costing me $2,300 a month, and now this $350 house is costing me maybe $2,175. And that's exciting.
Right.
Not the excitement you were looking for.
Right.
So there we go.
Well, you mentioned that you had some more reports and stuff. If people want to get more information and talk to you about a home, maybe a piece of property, or
just getting
some
the
of the
information,
other information, what's the best way to get hold of you?
Call me or text me is the best way. And my number is 540-209-1918. The 540 throws everybody because it's a Harrisonburg, Virginia area code.
That forever.
I have had that. Okay, wait a minute. Allison's going to be 21. That's when I got that number.
And
21
I've had
years.
mine for probably 18, 20 years, 281. So anyway.
Yep. So 540, don't be afraid of it.
We do these, because I can tell you she's local. She lives here. She votes here.
I do vote here. Elections. There's November 4th elections.
Yep. So we do this show talking real estate every Monday in some form or fashion. Sometimes we're just talking about why you want to buy a house here and what our beach is like. But I can tell you, it's always with Beth Appleby. We're going to head on out. Hope you enjoyed the show. If you have any questions, make sure you reach out to her. She's full of knowledge, and if she doesn't have the positive answer or the answer that you're looking for,
I'll get it for you.
she can find it.
I will get it.
Until next time, I'm David with Bolivar Live. Y'all have a great day, great week. Come see us. God bless, and bye-bye.
Video equipment is sponsored by Crystal Beach Decor and More, located at 1959 Highway 87 in Crystal Beach, Texas, and Beachy Beatnik Boutique and Jewelry, located at 970 Surfside and Highway 87 in Crystal Beach, Texas. Thank you to these two businesses for being our 2025 video equipment sponsor for Bolivar Live.